80% Sol. All of my ETH is now NFTs. I've been buying high-end art NFTs. I then have a bunch of the portfolio in the fund of hedge funds in Exponential Age Asset Management. It was great to get me my entry into ETH and Sol in 2022 because I used my liquidity cycle framework, the business cycle framework. Great. It'll give me some idea of when I might want to take some lifestyle chips off the table. So I don't run everything through the winter, not because I don't want to, it's because I want to take some chips off the table to do some lifestyle stuff. Okay, fine. So actually I'm a secular long-term thematic investor that have broken it down to a couple of simple KPIs because I like to keep things super simple. And then I use a business cycle and a bit of charting to help me understand where I am in that journey.
Raoul Pal believes Bitcoin is poised for a strong rally despite its current decline below its previous highs. In his latest market analysis, he expressed confidence in significant gains in the coming months, comparing the current situation to a previous cycle that led to explosive growth. Paul sees striking similarities between Bitcoin's current position and the post-halving rally of 2017. Back then, after a period of stagnation, Bitcoin experienced a sharp rise. He says the worst of the crisis is likely over and that market conditions point to an imminent breakout. Rather than a slow recovery, he anticipates a strong rally that could take Bitcoin back to its previous highs within a few months. While short-term price action has remained quiet, Paul suggests that investors could see a dramatic turnaround. The past few months have been difficult for altcoins, with many suffering heavy losses. However, Paul reassures investors that this trend is not unusual. Similar corrections occurred in 2017 before the market regained momentum. He believes the current consolidation phase is ending, paving the way for a new dynamic. According to Paul, Bitcoin's bull cycle is just beginning. He describes a market phenomenon he calls the banana zone, a phase of extreme price acceleration that often generates exceptional returns. Now, with the initial breakout behind us, it seems like the real fireworks are yet to come. According to Raoul Pal, Solana should be the main coin of your portfolio. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
I think the important thing is the DTFU strategy, number one. Second, educate yourself. Educate yourself from the right people. So get your sources of information from the right people and actually do some education. Studying the space, understanding the players, listening to the narratives, finding out where the opportunities are. So that's the key thing. DTFU, just keep it simple, but learn. And next time around, you'll really make money. We're going to have to ask ourselves, have we overbuilt block space? Because every capital cycle comes through this, right? The mobile phone cycle, the 3G, the 5G, the broadband, fiber optic, I mean, they all do it. So maybe that just means that everything past number 3, 4, or 5 just never recovers even close again. Maybe that's one way. Or maybe we miss a cycle at some point because we've got so much excess capacity. Don't know.
Financial markets showed some risk-on sentiment early Monday, March 24th, in Asia following reports that the next wave of tariffs imposed by Trump, scheduled for April 2nd, could be more measured than initially expected. Bitcoin, the leading digital asset by market capitalization, was trading around $86,500, up 2.7% in 24 hours, and Solana's token was trading nearly 6% higher at $138. Payments-focused XRP was up 2.5% at $2.44, trading above its 50-day simple moving average, SMA, after 2 consecutive weeks of positive price action. Sentiment improved as media reported this weekend that President Donald Trump's planned reciprocal tariffs expected on April 2nd could be more targeted than one-off strikes. Trump's tariffs disrupted market sentiment in February, sending stocks and the cryptocurrency market tumbling. Bitcoin fell nearly 17.6%, reaching lows below $80,000. Last week, the Federal Reserve raised its inflation forecast while lowering its growth figures, likely due to Trump's aggressive trade policy. The Fed, however, characterized the tariff-induced inflationary boost as transitory, though it maintained its forecast for 2 rate cuts this year amid an accommodative policy for risk assets, including cryptocurrencies. The Fed's action, combined with the prospect of tariff easing, has rekindled bullish sentiment in the market. The Delaware filing paves the way for Fidelity to provide indirect access to Solana, a crypto asset associated with a blockchain network known for its fast transactions and affordable price. Delaware's streamlined regulations have made it a go-to platform for financial firms, mirroring Fidelity's previous ventures in the cryptocurrency space, including its Bitcoin and Ethereum ETFs. Fidelity's move comes amid a flurry of activity in the sector. Competitor Bitwise obtained a Solana ETF trust in Delaware, followed by Franklin Templeton, which filed the Franklin Solana Trust. Both subsequently registered with the U.S. Securities and Exchange Commission, SEC, to launch cash ETFs. These moves reflect increased competition among asset managers to meet the growing appetite for various cryptocurrency investment tools. However, regulatory hurdles remain. The Securities and Exchange Commission, SEC, previously known for its measured approach, must approve any ETF launch. Thanks to the Trump administration's benevolence toward the cryptocurrency industry, the SEC was easier to manage than Operation Choke Point and the Biden administration's war on crypto. A successful Solana ETF could amplify institutional engagement similar to the success of Bitcoin and Ethereum funds. However, to date, the SEC has not officially approved any other alternative digital assets. Solana's growing role in decentralized finance, DeFi, and digital collectibles, NFTs, could drive demand, although its appeal remains significantly less than that of the 2 established cryptocurrencies. Like the others, Fidelity's filing illustrates the strengthening ties between traditional finance, TradFi, and digital asset markets. While the launch date of the Solana ETF is uncertain, this initiative reaffirms institutional confidence in blockchain innovation as regulations and investor appetite evolve. Paul believes Solana is poised to reach new all-time highs during this market cycle. He reiterates his belief that Solana is the Ethereum of the last cycle. According to him, Solana could rise between 235% and 570% from its current levels, depending on the type of cycle we experience in the coming months. In a left-shifted cryptocurrency cycle, prices peak earlier than in typical 4-year cycles, resulting in a shorter bull market and a longer bear market. Regarding the digital asset market as a whole, Paul says cryptocurrencies are undergoing a strong uptrend as he calls crypto summer. It's crypto summer. We've just started crypto summer. Crypto summer is only getting better. We can see 30% drops occurring in minutes, but that's crypto summer. This year should be crypto summer. We're in the sweet spot. Global liquidity is picking up and is expected to continue doing so. Economic cycles are expected to accelerate, so now is the time. This is the perfect time. This is the time when Ethereum will outperform Bitcoin, Solana will outperform Ethereum, and many altcoins will outperform Solana. The big trade has begun.